Is Wall Street spooked at the idea of a President Biden? Are we really out of recession? Yippee! And bank dividends, are they set to rise? Yippee again. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Okay, Paul, the market's down. The infection rates are up. Donald's looking a little bit shaky. Is this a fear of President Biden driving the stock market down?
Well, it's a nervous market, Peter, going into. We've got a week to go, and the polls tightening a little bit, and perhaps a little more sort of comfort coming in that maybe it won't be a Democratic clean sweep. Maybe President Donald can pull something out of left field, but I think the market's getting more accustomed to Biden. But look, it's going to be a tricky week and a bit until we're through this election period.
Yeah, and volatility always happens ahead of the election. There's the spike in infection rates. That is worrying the market. And we've got the stimulus stalemate, as I call it, because they just can't decide. And they need the stimulus. Throw in the fact that there's uncertainty either way. I noted that Goldman Sachs actually said, even though Biden will raise taxes and increase regulations, his big stimulus package will be a plus. So I got a funny feeling we won't see a massive sell-off if Biden wins. But who knows with the Americans and who knows with Wall Street. Okay.
Yeah, and I think a lot still comes down to, I mean, you and I probably disagree about this. I think a clean sweep is actually worse for the markets than if, and we're talking about, of course, the Senate and the Congress. No one expects the Republicans, apart from Donald Trump, to take back the Congress, the House of Representatives. So that's set to go stay Democratic. It's the Senate where probably most of the action, and there's sort of 50-50 is whether the Democrats can win enough seats to take control. I think it's probably looking less likely. And of course the presidential election. So if the clean sweep is, of course, if the Democrats get all three, that's looking less likely. But under that scenario, I mean, it's an unlimited Biden. So I think that's worse for markets longer term. But I agree with you. The argument about the stimulus, and even with a Republican Senate, they're still going to have to do something, right?
Yeah, without a doubt. Okay, let's go to the next one. Are we really out of recession? The RBA says, yes, we are.
Well, I don't know what he's smoking down there in Canberra. I mean, this is Deputy Governor Guy Debelle. I mean, there were some other stats that came out of the last couple of weeks that have looked quite promising. So, I mean, look, most of Australia, bar Victoria, is still working along.
Chugging along.
You know, the export sectors are doing well. The farming sectors are doing well. So it's not all bad news. We know Victoria's locked down.
Spending our tourism dollars at home. Yep.
So look, it wouldn't surprise me whether we end up with a sort of a technical. What's the opposite of recession, Peter? Technical something or other.
Well, the end of the technical recession would be 2 months, and then we into positive growth. So we're growing.
Yeah, and look, some of the other figures that come out suggest that the lockdown in Victoria hasn't perhaps been as bad as on growth as people think.
People have been buying stuff online.
People have been buying stuff online. So maybe they're smoking something at the RBA. I don't think it puts off the rate cut next week or any other actions the Reserve Bank. The Reserve Bank wants to get stuff up. We've got inflation CPI coming up this week. It wants to get the economy firing on all cylinders. Go to the RBA, shall we?
4 or 6 cylinders.
Well, maybe we need, I don't know what, if electric cars still have cylinders, I don't know. We'll leave that to next, but
I thought you were going to say
right?
V8 from there. That was politically incorrect.
Yep, can't
Finally,
have V8s.
bank dividends. Now, are banks on the improve, and will dividends start to increase again?
Well, look, I think the answer is not yet. They will next year. We're about to go into bank reporting season. ANZ kicks it off tomorrow, Westpac on Monday, NAB the following Thursday. Right. Now, each of the major banks has come out with write-downs, announcements, what they call notable items for against the bottom line in the results. So yesterday we had ANZ with $528 million, Westpac the other week with $1.22 billion, and NAB at $450 million. Now at the moment, dividends are limited to effectively their statutory, their real loss, right? Yeah. And of course all these write-downs are impacting the real loss. And that's what they do. So I think the best we could probably hope for tomorrow is ANZ, maybe 60 cents for the full year, which would see it's already paid 25 cents, so that would be a final of 35 cents. That'd be a positive. Market's looking at somewhere between 30 and 35 cents. Westpac hasn't paid a dividend at all, but we might get 30 cents.
Bit stingy.
And NAV coming out at the end of next week, probably again around about 60 cents in total. It paid 30 cents in the first half, maybe 30 cents in the second half. Yeah. So that's about what we're looking at. Next year, rather than the sort of 60 cents the banks will pay this year, we're looking more like 80 to 90
Have
cents.
bank share prices risen on the basis that people are starting to believe that maybe next year we'll see higher dividends?
I think a lot of reasons why bank share prices have risen, but they were near book value. They've always been historically cheap near book value. Clearly, I think one of the drivers behind their rise is the fact that they all look like they've over-provisioned for the impact of
So can
of
these
COVID-19.
write-downs be overwritten?
Well,
Paul?
they can be. They probably won't do it yet, Peter, because, look, to be honest, none of the bad debts are coming through because businesses haven't folded yet, right?
Josh has saved them with JobKeeper.
We know receivers are doing it really tough at the moment, right? Because
24 and a half year low of insolvencies.
Yeah.
Unbelievable.
So the banks really can't do much. So I don't think we're going to see any reversals in this half. But you're still going to be, as a banker, we're conservative type of people and we're going to be worried about what's down the track. But look, we really won't know this, but I think what the data people will be looking out for is in terms of how many of the home loans people are paying interest again on. That's been a good trend.
Yeah.
So I think we're we're about the worst of the cycle. And that's one of the reasons why bank share prices have risen, Peter.
Okay, I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.